Everybody, happy Tuesday, May 19th, 2026. What's going on, everybody? Thank you for tuning into the Daily Digital Download with me, your host, Dylan Grabowski. Let me really quickly just add the link to the old TL. How's everyone doing today? I hope we're doing well. It is a cold, rainy day here in Colorado. And, yeah, can't really get too mad about that. Let's do that. All right. Posted. Awesome. Well, we continue our trudge into diminished activity going on in the broader blockchain and cryptocurrency space. I want to say that, however, we're just getting more of the same again this week. More hacks, more pro-crypto news coming out of our regulatory bodies. Actually, an interesting piece of news that did come out today is Kraken announced that they are up on revenue this year. And, we have a Democrat governor doing something pro-crypto for their state. So I'm excited to talk about today's news on today's Daily Digital Download. Let me take a quick sip of my coffee, mi café. And let's just jump right into it, eh? All right. The SEC is proposing an innovation exemption for tokenized stonks, which could come as early as this week. They want to release a new framework for tokenized securities that could transform the securities market. The SEC is expected to publish that this week, and it would allow traditional institutions to experiment with blockchain technology without having to comply with a full registration process. In the past months, the SEC has greenlit several entities to go ahead and move forward with tokenized securities. In March, they approved a rule change that would allow the NASDAQ to support trading tokenized shares. They also approved the New York Stock Exchange to develop a platform for trading and on-chain settlement of tokenized securities, and establish a strategic partnership with OKX in March as part of that endeavor. However, this doesn't mean that when an equity or a tokenized security goes on chain, that all rules go out the window. The SEC continues to hammer home that tokenized assets are still securities, and they are regulated under federal securities law. However, this is the kind of killer byline for why a traditional financial entity would want to tokenize securities. Blockchain-based token securities offer low latent settlement, reduced intermediary costs, and 24/7 trading, as opposed to traditional stocks, which are limited by settlement, delays, and fixed hours. At this point, I don't think that we should be overtly getting excited anymore about pro-crypto stances from the SEC or the CFTC. There's that story in Kill Bill about the frog that takes the scorpion across the pond. And after the frog got the scorpion to the other side of the pond, the scorpion stung the frog, and the frog asked, "Why'd you do that to me?" And the scorpion said, "What'd you expect? I'm a scorpion." And that's kind of how I feel about the SEC and the CFTC right now. They're both head by pro-crypto chairs, and part of their mandate is to increase tokenization and blockchain adoption. So I love seeing innovation exemptions coming out for tokenized securities, but this isn't also coming out of left field. However, what did kind of come out of left field, and this is a nice transition, the Kraken, one of America's largest custodial exchanges, is up 3% on the year. They've made $507 million to date. Well, this was on May 18th that this article came out. $507 million in revenue, and they're saying that they have a more resilient mix amid a spending spree. Kraken has just been merging and acquiring so many companies this year to build out a full compliance stack. They're acquiring entities that give them spot trading licenses, futures trading licenses, money transmitter licenses, things of this nature. And they've been spending a lot of money. However, co-CEO Arjun Sethi said that it's kind of shocking that Kraken is up 3% over the year amidst, quote, one of the most challenging quarters the industry has faced since 2022, end quote. It is no surprise to anyone that crypto's been in rough shape this year. Co-CEO Arjun Sethi also noted in several recent statements that Kraken is investing heavily in acquisitions, product development, and growth initiatives as it gets ready for its IPO, its public listing, its initial public offering on the U.S. stock exchange. However, with a cooling crypto market, and honestly, the fact that this is a surprise that Kraken is up 3% in revenue after such a rough quarter, this to me is a positive externality. This is an outlier. Many exchanges, many crypto platforms and product offerings are hurting right now. They're not making money this year. And as is such, the outlook on the entire industry is kind of rough right now. And because of this, Kraken is reevaluating whether it will indeed hold an IPO. And then the rest of this article just highlights how much Kraken raised funds for at a $20 billion valuation in November of last year. Speculation as to why the IPO might be pushed back to February 2027, as well as other acquisitions and buyouts that Kraken has made this year. So this is great. We're still seeing activity. And I can't get that mad about it. You really can't. Honestly, anybody who's doing good right now, from product to platform to DApp to people looking for new jobs, this is a very tough market. And anyone who's doing good right now, keep an eye on them because they've got some secret sauce. They've got something that people want. And this leads into my next story, which is kind of an anomaly. I'm trying to figure out what the heck is happening, and I think we'll go with the easiest explanation for this. But there have been two more high-profile entities that have left the Ethereum Foundation. Carl Beek and Julian Ma announced that they're leaving the EF, and this is just the latest in a slew of Ethereum Foundation EF researchers and folks who work there who are leaving. Included in recent departures are the heads of major protocol clusters, the co-executive director of the EF stepping down in February, Tomasz Stanchek, who was also a guest on the Smart Economy podcast. Go check that episode out. It was awesome. And Josh Stark, who resigned in March after 7 years. Amongst others. So, let's just take a quick peek first. This is the Teams page for the EF website. And all three of the protocol leads, Alex Stokes, Barnaby Monet, and Tim Belko, have left or are leaving. And this also impacts high-level protocol architecture and coordination teams. And then we're also just starting to see others leaving as well throughout the other protocol subteams. So, like, what the heck is happening? Why are these folks leaving the EF? Well, in 2025, early last year, there was a major shakeup at the Ethereum Foundation. Former executive director Aya Miyaguchi left the foundation, and at the time, there were 2 co-executive directors that were put into place. And this was great because I'm totally spacing on the name of the Ethereum Foundation. Xiao Wei. Sorry. When Xiao Wei and Tomasz came into the Ethereum Foundation last year, a lot of people were really excited because Tomasz brought product experience as he'd grown out Nethermind, and Xiao Wei brought kind of the higher level, more philosophical kind of creative side of the brain as part of that co-executive model. And look, the EF was doing awesome. Xiao Wei was working quietly behind the scenes and getting the protocols and the teams to line up well. Tomasz was out doing the tour, pounding pavement, onboarding developers into the ecosystem, providing resources for projects and products building on Ethereum. My buddy Brian Smokovich from Pistachio Finance relayed a story about how Tomasz reached out to him to offer a booth at DevConnect for Pistachio. And Pistachio is a fantastic app. I love it. It makes it possible and easy to earn on your dormant cryptocurrencies and digital capital on a mobile forward app. They haven't fundraised millions of dollars and they're grinding and they're bootstrapping, but that was the efforts that Tomasz was making. And a lot of people were feeling this positivity coming out of the EF. They were seeing the positive changes. And then something happened this year. Something happened in February. Tomasz stepped down. And since then, we've seen a lot of changes at the Ethereum Foundation. Now there's a lot of criticism that is being thrown at the foundation. And people are asking why? Why are all these folks with red crossed through their name leaving? Why are high-profile people leaving? Well, some are saying that they're going on sabbatical. Some are pointing out that they have young families that they just started and they want to spend time with them. There's nothing wrong with that at all. But we're starting to see a pattern, right? So, largely, the speculation, the hypothesis is that as part of the recent blog post about Ethereum's new focus on crops, which is short for censorship resistant, open source, privacy, and security. When that blog post came out, this was post Tomasz departure, it was a signal to the industry that the EF was taking a step back from the way it had been operating from the previous year, which so many people liked. You know, EF was putting their capital, their dormant ETH into DeFi protocols. They were staking it. They were talking about people building on Ethereum. They were supporting ETH builders and bootstrapped grassroots devs at major Ethereum conferences. And then when crops came out, it was like, some would argue, it was a virtue signal to go back to the Ethereum Foundation was in 2024 and before. And part of this crops article that came out was also I don't know how to put this. The Ethereum Foundation asked all of those working there to sign a mandate saying that they have a loyalty pledge to the crops ideology. And some might be saying that having people sign this mandate, verifying that I'm going to align myself with groupthink, might have frustrated some people. Another example I can think of where this happened was when Brian Armstrong released that company-wide memo in 2023, I want to say, basically saying that Coinbase will only focus, and Coinbase employees will only focus on crypto, and that woke or political ideology is not welcomed and not allowed in Coinbase. And employees had to sign a letter saying that they hear and acknowledge what Brian Armstrong said. And a handful of people left as a result of that. And that's the last time I can think of something that is similar to what's going on with the EF right now. If EF is asking people to sign a mandate, pledging undying loyalty to the crops philosophy, then yeah, maybe some people are rubbed raw by that, because blockchain and crypto is, after all, a highly creative and individualistic, empowering technology and ecosystem, even though our technology and our asset class benefits the globe. At the end of the day, I think a lot of people really like working in this space because they have the autonomy to build what they believe in. And so maybe that rubs people wrong at the EF. I don't know. But let's not get too down on Ethereum. Let's not get too negative on Ethereum, because Ethereum's on-chain conviction continues to grow as the amount of staked ETH rises. At the beginning of the year, the amount of staked ETH was at 29%, and today it's at around 31%. Even though the price of ETH is down 26%, there are a growing number of on-chain fundamentals that continue to go up and to the right. Most notably, Ethereum's dominance with real-world assets that are allocated on that chain. So what does all this say? That the continued rise in stake ETH is showing that long-term holders are maintaining conviction despite price weakness and on-chain risk. And as I've said numerous times throughout the daily digital downloads we've done this year, ultimately, I think this is good. And the price of ETH will eventually capture this. If not from the principle of the fact that more people want to buy it because they can stake and earn yield on it. But as more and more ETH is taken off of the market and staked, that signals to the market that ETH as an asset and ecosystem and vertical technology is worth allocating into, and more people might want to purchase ETH. Now, what happens when demand for an asset goes up, but supply goes down? That impacts the price in a positive direction upward. This has been my theory all year, but as this article points out, the price of ETH is down 26% since the beginning of the year. Now, we are in a crypto bear market, so that's to be expected. But I would hope that fundamentals, market fundamentals, will ultimately play out, and we'll see a positive move to the upside for the price of ETH. However, there is this broader narrative around Ethereum. It has RWA settlement, DeFi infrastructure, and L2 activity, which continues to position Ethereum as a network and as a blockchain as the core plumbing for on-chain finance. So let's continue to see what happens. Just wanted to point out that even though we're seeing EF departures, we're seeing more ETH staked. Moving on to our last two pieces of news, we will balance it out with something positive and something negative. A Bitcoin finance protocol called Echo has been exploited. The eBTC market on the Monad blockchain was attacked. The root cause of the exploit has yet to be identified. However, according to on-chain sleuthing entity On-Chain Lens, the malicious actor minted 1,000 eBTC tokens, which is the liquidity token for Echo Protocol's Bitcoin allocation that is issued on the Monad blockchain. The attacker then deposited 45 eBTC into a DeFi lending protocol called Curvents and used that as collateral to borrow 11.29 wrapped Bitcoin, which was worth around $867,000 at the time of the writing of this article, which was May 18th, last night. The exploiter then bridged its WBTC to Ethereum and swapped the tokens into ETH. And then that 385 ETH that the tokens were swapped into moved to Tornado Cash to mix and obfuscate the origin and destination of those funds. The attacker still holds 955 eBTC tokens, which are worth approximately $73.2 million. However, that 99% of the fake supply is parked in the attacker's wallet because Monad's lending and DEX depth can't absorb more. We were saved because Monad's markets aren't deep. Echo also added that it has since successfully regained control of the keys and burned the 955 eBTC that the attacker had in their remaining possession. And this is just the 14th security breach in May. It's May 19th, so we've almost had one a day. Keeping up with the pace of attacks that we saw in April this year, which again was the largest amount of exploits, hacks, and attacks on blockchain projects to date. Now, there wasn't the most amount of money stolen. There was just the most amount of hacks done in April of 2026. And we continue to see this in May of 2026. So hopefully the damage has been mitigated. The wound has been cauterized. We no longer bleed. And honestly, luckily, it was a small enough amount that we're not going to see negative widespread contagion like we saw with the major hacks of April, in which more than $500 million were attributed to North Korea from just two attacks. Drift Protocol and KelpDAO. All right, let's finish on a positive piece of news. I also just want to give you guys who are here this. Thank you for being here. Thank you for tuning in. I appreciate you. Minnesota has signed a law allowing banks and credit unions to offer crypto custody services. Why I wanted to point this out is because this was enacted into law by Tim Walz, who was running as the Democratic vice president nominee in 2024. And if you... Hold on, let me take a sip of coffee. If you take a step back and look at the political nature of crypto right now in DC, it's bipartisan. Largely, Republicans are pro-crypto and Democrats are anti-crypto. Now, there's nuance. There's a lot of differences. I'm just going off of a generality here. And this is why I like this piece of news, because we have a very, very Democrat governor supporting a pro-crypto piece of news. The bill, which is called HF 3709, goes into effect on August 1st, 2026, and will allow banks and credit unions to offer cryptocurrency custodial services. It also requires the banks and credit unions to ensure the segregation of client assets from the institution's own assets. This is something that would have saved FTX depositors when that happened, because FTX was commingling funds. And this is another great quote that I saw. The Minnesota Credit Union Network, the state's trade association, said that the legislation, quote, gives Minnesotans a safer way to manage crypto, end quote, and helps to strengthen protections against frauds, hacks, and loss through regulatory oversight. Again, we have a left-leaning state government that is supporting crypto as a digital asset and integrating it into its state banking processes. And then we also have trading unions, or the union network, the credit union network, that is identifying the pros, the positives that are associated with this piece of news. Particularly as we've seen states fighting against prediction markets, but that's because of sports gambling. But prediction markets are in our wheelhouse. These are blockchain-empowered platforms and applications that are being fought against by states, particularly conservative states that don't want to enable and allow gambling in their states. So, while we have that as a backdrop, we also have states like New York, Wyoming, and Virginia, along with Minnesota, that are permitting banks to provide crypto custody services. This once again points to the fact that we are in the least sexy moment of onboarding, of mainstream, where more and more money is coming on chain, more and more capital is flowing into our ecosystems, more and more traditional financial institutions and entities and mainstream financial institutions are adopting crypto and implementing blockchain, and yet sentiment is just in the gutter on crypto Twitter. This is the backdrop. Like, we have adoption happening. Now, that being said, Minnesota also enacted a ban on crypto ATMs and kiosks across the state. And they are just joining a long list of, well, a growing list of states that are banning cryptocurrency ATMs and kiosks across their states, largely to help stop the flow of basically elderly getting defrauded and sending their funds to scammers via these Bitcoin ATMs and kiosks. That is the logic and reasoning for why states are prohibiting the use and installation of these ATMs. All right, folks. With all that said, if you haven't yet, please subscribe to our newsletter at thesmarteconomist.beehive.com, where we were bringing you weekly newsletters, but I had life get in the way for the past couple weeks. But we'll be back this weekend. Fear not, friends. We will be back. And with all that said, thank you so much for tuning in to the Daily Digital Download. We'll be back tomorrow to talk about the latest and greatest. I am getting ready for an interview with the co-founder of Near Protocol, Ilya. We're going to be talking about blockchain in 2026, AI agents, and building for AI. Super excited about this podcast interview and can't wait to share it with y'all. So, until tomorrow, be safe, take it easy.